Welcome to today's deep dive, put together specifically for you. We are unpacking the brand new Vantage Plus weekly crypto analysis.
Yeah, the one that just published today, Monday, May 11th, 2026.
Mm,
There is a lot to cover.
there really is. And, just to set the big picture here, the broad market sentiment is incredibly positive
Uh,
right now.
Definitely. I mean, we've got a weak U.S. dollar, and U.S. equities are just surging.
Right, the NASDAQ hit an all-time high, and that's basically acting like this rising tide propping up crypto.
It is. But it's a rising tide with some pretty dark clouds on the horizon.
Exactly. And that's what I want to ask you about. We have these U.S. private credit risks flaring up in the background. Why is the market totally ignoring the danger and just focusing on the upside?
Well, honestly, right now, momentum is a drug. When tech equities surge and the dollar softens, institutional capital just scrambles for the highest yield growth asset.
So they're just pricing in the macro upside and totally dismissing those localized credit risks.
Pretty much, yeah. And the thing is, this positive macro sentiment, it's not spreading evenly at all.
No, it's really not. It's almost entirely concentrated in one place. I kind of think of it like a giant industrial vacuum cleaner.
Oh, that's a good way to put it.
Right, like Bitcoin is just sucking up all the institutional oxygen in the room and leaving basically nothing for the rest of the market.
The data absolutely backs that up. I mean, BTC ETFs are seeing their longest run of continuous inflows since, I think, August 2025.
Which is wild, and consequently, Bitcoin just smashed right through that $80,000 psychological resistance. It's trading at, let me check, $80,887 right now.
Yeah, the buyers are aggressive. But the next major hurdle is $84,000.
Wait, why 84,000 specifically?
So that level acted as a major support floor back in November 2025. In technical analysis, yesterday's floor, often becomes tomorrow's ceiling.
Oh, because people who bought there before are just waiting to hit break even so they can finally sell?
Exactly. There's a lot of market memory there.
Okay, so because Bitcoin is basically hoarding all this capital, the altcoins are really struggling, right? Like they're lagging or just getting crushed in minor corrections.
Yeah, mostly. Though a few are trying to fight the current. Like Ethereum, it's hovering around $2,321 right now.
Moving with Bitcoin, kind of.
Sort of, yeah.
Uh-huh.
But it really needs to break $2,400 to unleash that explosive momentum we saw back in Nov 2024 and July 2025.
Right. And then there's Solana, which is basically walking a technical tightrope. It's at $93.01 and just crossed its 50-day moving average.
Yeah, and it's definitely eyeing $120, but, and this is a big but, dropping below $80 would trigger massive selling pressure.
Like automatic stop losses and algorithmic trading just dumping it.
Exactly. It's a very high-stakes position right now.
Wow. And then looking at XRP, it's at 1.4188 cents. The report notes it's finally stopped falling, which is good.
Yeah, doesn't even need major news to rally at this point. It just needs to break $1.50 and then $1.60.
Which was that historic resistance from way back in April 2021, right?
Spot on.
But let me push back on this for a second. Do these specific altcoin resistance levels even matter right now? I mean, isn't their fate 100% tied to when Bitcoin finally decides to, share the wealth?
Well, that assumes the wealth will eventually be shared downstream. That's how native crypto traders work. They rotate profits into altcoins.
Right, the classic capital rotation.
Exactly. But Wall Street institutions buying Bitcoin ETFs, they don't operate that way at all. They aren't looking to roll their Bitcoin profits into XRP or Solana.
Oh, so when they decide to take profits, they might just cash out completely back into US dollars.
Precisely. They might just take their winnings and leave the casino.
Wow, that really changes things. So to summarize, for you listening, we are firmly in a two-tier market right now.
Yeah, Bitcoin's ETF inflows are dominating everything.
And forcing altcoins into this high-stakes waiting game, which actually brings us right back to the beginning.
The private credit risks.
Right. The Vantage Plus report made a point to say that U.S. private credit risks haven't impacted the markets yet.
Key word there is yet.
Exactly. So here is a final provocative thought for you to ponder. If those traditional credit cracks suddenly widen, will Bitcoin's new institutional ETF armor actually protect it?
Or will those same institutions panic, cash out to cover their losses elsewhere, and bring the whole crypto tide crashing back down?